Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, and let's figure out what is happening today with Tesla and what it, of course, can mean moving forward for Tesla as well for the rest of the week or maybe even the next week or two. So as per usual, if you enjoyed the video, don't forget to hit that like button as it does help a lot. This is not financial advice. I am not a financial advisor. And of course, my membership section on YouTube is live. The link is down below for $2.99 a month in the description of the video if you're interested in joining for my up-to-date thoughts, posts, technical analysis updates, options flow on Tesla, and sometimes other stocks as well. Pretty much throughout the day, every single day that Tesla is trading. So if you're interested in getting these updates, then the link is down below again for just $3 a month. But let's jump right into it. Tesla closing the day, well, almost closing the day. We have about a minute left. We'll just say at about $199.4 per share, which is of course just shy of 200, but nonetheless pretty good. Almost 4% on the day, with the market being flat to slightly red. So a pretty respectable outperformance. Now, what does this mean? Now, first, let's talk about something, right? Some people might be wondering, well, okay, well, why are we bouncing today? Like, why is Tesla up 4% today? Other than potentially, some technical analysis aspects, which we'll talk about, right? The main reason, in my opinion, on top of, some technical analysis updates, is the fact that, well, Li Auto is up 18%. Now, you might be wondering, what the hell is Li Auto? Well, it's essentially, it's not a full EV company in China, but they make like hybrids and EVs from, at least from what I'm aware. I'm pretty sure they also make EVs, but nonetheless, it's essentially in the EV business-ish, if you will, in China, similar to like, a BYD or something like that, right? They reported earnings and they're up substantially. You can see here almost 20% on the day, which is pretty much pushing all EVs today. Today's just a green day for EVs. Like Lucid's up, Rivian's up, right? The Chinese EVs like NIO and XPeng are also up, a respectable amount, 7%. So just saying, so that's part of the reason why Tesla is up, because Tesla is, well, it's an EV company that also operates in China. So that's, good news for Tesla if these ones are performing well and essentially having better than expected earnings, which is what happened. So in case you're wondering as to one of the reasons why is Tesla just randomly shooting up 4%, well, that's one of the main reasons, right? So keep that in mind. Now, let's talk about the actual technical analysis. So there's a few things to talk about here, and there's some good news for sure. So first and foremost, the overall picture is this, right? We're in this potential, massive bear wedge, right? Again, it's still potentially concerning, right? But there is still potentially some short-term good news where, we had a massive fall and now we're essentially setting up what could be a massive bear wedge that actually still has room to go for the gap fill here around that, 207 to 210, like that rough price range. There is room to go there. Now, we are unfortunately getting slapped back down, unfortunately, by the 200, rough 200 level, psychological level. But the good news is the fact that today, Tesla, first of all, bounced near the bottom of the wedge, which is good to see. You can see here several times we bounced here, which we did again today, which is nice to see. But the more important thing, in my opinion, is the fact that, well, we regained these two moving averages, the 21 EMA being the yellow one, the 30-day moving average being the orange one. We talked about this on Friday, right? I said on Friday how I thought Tesla would do a whole lot of nothing. Well, clearly, Li Auto earnings decided to change that entirely. But, we also talked about how if Tesla does regain these moving averages and ideally starts closing candles above them like we did today, well, that's a good sign. And that's exactly what happened, right? So naturally, I flipped. It's not that I was bearish. I still had a bullish position. I said how I sold my shares at 197 on Friday. And then I sold cash secured puts when Tesla dropped down to about 194 for 185, right? And I still have those cash secured puts. Again, those are cash secured puts. That's still a bullish position. I just took some risk off the table, waiting for more confirmation. And this is kind of the confirmation I've been waiting for, a closure above these moving averages that we clearly had issues many times in the past, like recent past as well, just constant rejection over and over and over. So today with the close, that's the start. I started re-adding shares, not the full position, but I'm still re-adding shares and I'm still holding my cash secured put to most likely at this point by Friday, this coming Friday, expire worthless, and that premium is just mine. So this is a good sign. The fact that we closed above this is a good sign. The thing I'll be expecting next is one of two things, really. One, the healthy thing would be to come back down, let's say tomorrow even. Tomorrow, maybe Wednesday, but ideally tomorrow, come back down and retest this breakout essentially on this moving averages. Come back and turn these moving averages from resistance back here into now support. If we can just start doing that and start showing signs of that, that's really good. So in other words, my current plan, if you're wondering, start re-adding shares, which I have, right? About a quarter of my position. Between 199, which is roughly where we are right now, and 196. That range is where I'm slowly going to be re-adding shares. If we drop a bit lower, I'll re-add. If we drop a bit lower, I'll re-add. With the stop loss being two things. One, if we start closing candles below these moving averages once again, and this ended up just being a false breakout, which is possible, right? There is obviously risk involved. It's not guaranteed. Or if we also fall below this bear wedge, right? This, massive bear wedge that we're in. So whichever one happens first, maybe at the same time, they can both happen. It'll take some days, of course, for that to happen. But if any of those situations starts happening, that's where my stop loss will most likely be, and I will most likely exit my position. So that's kind of the way I'm looking at it right now, right? But all in all, the good news is the fact that, yeah, Tesla broke above resistances on decent volume as well. You can see down here, the volume did increase on Tesla, which is nice to see as well. So it's respectable volume. As we were declining, we talked about this also, the volume has been declining. Like yesterday, or not yesterday, Friday, it was a red day. But we did talk about how the volume was quite low, right? Now, on the green day, that essentially reversed yesterday's losses and then some. Very nice volume. So there is some good signs here. There are definitely some good signs for Tesla here that I like to see. Let's go over to the 4-hour, actually not the 6 5-minute chart. So this is the one chart that I guess maybe causes some concern. So there's two things that I see here. One is we obviously broke out, right? This red line here broke out, come back to retest potentially tomorrow, which will be pretty much around that 196-ish level I've been talking about. But the one thing that's interesting to note is the fact that we rejected almost perfectly in this yellow line of this kind of slightly ascending channel where we've been kind of zigzagging in between. So far touching the top point and rejecting almost to perfection today as well, but similar to the bottom side, bouncing off almost to perfection as well. So I'd want to see one of these decide to break in either direction as well, which is why I'm not adding super heavy right now, right? I'm like re-adding again about a quarter of the shares that I sold. Slowly but surely, no reason to be greedy. Whenever you're greedy, this market will find a way to slap you back down real fast. That's for sure. I've learned that lesson before. But yeah, this is kind of another channel I'm kind of watching on the 65-minute chart. So keep that in mind, right? So that's pretty important to understand. And the thing that's really good to note is the fact that on the 15-minute chart, and this is what I was talking about with my members back here. So this is that one I just talked about there. The 15-minute chart is this one here. This is, you can see, in the morning when we just broke above it, I talked about how ideally, it might be difficult with overbought levels because the RSI was really, really overbought when it initially broke. But what happened was I said how I want to, ideally Tesla should hold this rough green rectangle. That's exactly what happened, right? We came up, we came back down, held roughly in the area and bounced up, came up all the way to the low 200s, which is, interesting to see. Got rejected exactly at the top of this yellow channel. And then we came back down and like I said, whenever you're resetting the RSI in this case, it doesn't mean you have to crash. So in this case, we kind of went down slightly, but for the most part, went kind of sideways from this breakout, essentially creating what could be a small intraday bull flag, but resetting the RSI. But the most important part is the fact that we are holding above this breakout. So one thing that's to note is this. So this is important. So ever since we had this massive rally back here, right, from this, 182, we had this massive rally. Ever since this massive rally here, we've been kind of zigzagging, right? But the thing to note that's important, that I'm sure some people may miss, is the fact that when we're zigzagging like this, every single time we went up to like the lowest level and then to the highest level and then back, it was a lower low. After these two movements, it was a lower high and a higher low. Lower high, higher low. We kept zigzagging in a tighter and tighter range essentially, right? Just getting tighter and tighter and tighter, constantly setting lower highs, higher lows ever since this movement here. And the way you want to look for like a confirmation in a direction on this is, well, you want to see a break above one of these levels. You want to see an either higher high or a lower low, right? And that kind of breaks this current trend that we're in and sort of picks a direction as to where the stock wants to most likely, nothing's guaranteed of course, but most likely head next. And that's exactly what happened, right? This is what I posted to my members right here, right? I posted it earlier over here. This was the level, right? This was on the 4-hour, I believe. This was like a more simplistic way of looking at it. So let's go on the 4-hour, take a bit of an easier look at this, if you will. I don't know where that thing went, but it should be here. It looked something like this, I believe it was. Where is it? Click that, go here, right? It looks something like this. Beautiful, right? So essentially the way you want to look at it is you'd want to see a break, either again a higher high, which essentially is breaking the previous high, or a lower low, which is essentially breaking the previous low, right? That we just said. And clearly with this candle, we went up and we broke this previous lower high to set now a higher high, a fresh higher high, which was a break of trend to the upside. And on top of that, which is what this 15-minute green rectangle is, we came back to here. You can even see in the 4-hour chart, we came back to retest that breakout. And so far, of course, things can change, but so far looking pretty good and turning what was essentially a resistance now into a support. Sometimes it's really just that simple, right? Same concept here. This was that area that I showed you back here, right? Constant, rejection, We broke above this trend, broke above this resistance, came back down, turned it into essentially what now looks to be a support. And so far, so good, resetting the RSI. And it looks like we're setting up, like I said, an intraday bull flag ready for the next move higher. So this is why I'm starting to re-add shares here. And I'm feeling pretty confident. Now, again, things can change, right? I do want to make this very clear. Even though I think that, the room to 207 is still very much there. It's still within this bear flag even, or bear wedge, or whatever you want to call it. There is still some signs of concern here. Now, the reason that there are some signs of concern is, well, first and foremost, this move right here can still be a false breakout, and we can still crash below. Some news can come out, something can happen, and it can still take things underwater, essentially. That is still very possible. So keep that in mind, right? Essentially a break below these moving averages and or a break below this bear wedge, which is this bottom red line, which tomorrow will be somewhere around 193 to 192, something like that, right? But I don't think it'll happen. I'll be surprised if it does, honestly. But obviously a possibility. But the overall risk, though, however, is even though, like I said, we do have this room in this bear wedge to go up to about this level of 207 for the gap fill, well, it's still a bear wedge. That's the issue, right? And this move to the upside of this 207 gap fill, if we take the Fibonacci here, go from here, from this swing high up here to what clearly was the swing low, right? You can see the 0.382, which is the first true level to retest, is 209, which is pretty much almost exactly where this gap fill is. So keep that in mind. That's a pretty important level because we can still potentially come up here. Could be even by this end of this week, easily. I very much would not be surprised, especially with the options flow being pretty bullish. Oh, I'm on the wrong one. With options flow being quite bullish, which we'll talk about very soon. It is. I think there's a very real possibility we do retest this breakout, this earnings gap fill. Honestly, by this week, it very much would not shock me whatsoever. But with that being said, that would still be inside the bear flag and or wedge, and that can still be a retest of the 0.382, which is essentially a dead cat bounce, which essentially can still be a target for this bear wedge, which can also still be a massive area of rejection and can see us fall pretty substantially from there, at the very least back into the 180s, if not maybe even making a lower low. That is still a real possibility. Now, with that being said, this is going to be very important, by the way, if and when we get there. With that being said, though, if we do break above this kind of, let's just say 209-ish earnings gap fill level and break out of this bear wedge to the north side, so above the top red line, if you will, and we break above that, well, that's when things can start flipping more bullish. And that's when this, which again can still be technically a dead cat bounce, will start unlocking the potential for this dead cat bounce, or this correction from this massive fall that we had. It will unlock the potential for the 0.5 to the 0.618 fib levels to be unlocked, which is pretty much anywhere between 220 to 230, which, as I'm sure you remember, right? 220 is where that green line is, which is the 200 moving average on the weekly, right? It's about 223 right now. We can easily go up to that, or we can go up to the 200-day moving average, which is on the daily, of course, around 234, low 230s roughly. That essentially unlocks that potential. But in my opinion, the most important thing to look at for this week, maybe for next week as well, but probably mainly for this week, if not early next week, is going to be, how does this bear wedge play out? Do we maintain above these two moving averages? And do we break above or below this bear wedge at some point this week to early next week? That is going to be the main thing I'll be looking at. I do think there's a very real possibility the 207 earnings gap fill is in play, is the target. But again, I'm not ridiculously confident, or else I'd be literally all in right now. I'm conservative. I'm being safe about it. I'm not rushing into it. I've learned my lesson many times with Tesla. If you just rush into it and being greedy, well, the market will just smack you in the head pretty aggressively, and you're gonna regret that. Now, taking a quick look at options flow, extremely bullish. There were some massive bearish puts in the morning. They're clearly underwater because they're underwater. Let's just say that 1.6 million, 1.5 million puts here, pretty much as the market opened. Clearly that didn't go so well, but other than that, I've been saying to my members how the options flow has been very bullish. Some bearishness here and there, but much more bullish and bearish, and it's not even close, I would say, right? And a lot of the bullishness you can see here for March 1st, a lot of March 1st, and some even March 15th, which is the week after, I believe, right? If I'm not mistaken. Yeah. Let me double check that. No, sorry, that's the week after that. So 2 weeks after. But nonetheless, a lot of bullish flow for March 1st and March 15th are the two main ones I'm looking at, with a 16.9 million call, 120 call, so exceptionally in the money, above the ask for March 15th. But it is a spread floor. So to me, this just means that some institution doing, sometimes who knows what really with these institutions, right? They're making some trade. It clearly is bullish, but it's so in the money that it's not overwhelmingly bullish, but it's a substantial premium. So hard to put too much weight onto what this really means and what the true intent behind this is, but it is bullish. But even with that aside, even if we just completely ignore that one whatsoever, there's a lot of bullish flow for this Friday, man. It's kind of shocking how much bullish flow there is for this Friday. People are very much expecting a Tesla rally to about 205 at least by this Friday. That's what the options market is saying. So we'll see if that actually plays out. But that's kind of the main thing I'm looking at right now. Ladies and gentlemen, thank you so much for watching. If you enjoyed this video, don't forget to hit that like button. But so far, so good. So far, Tesla's looking pretty solid. And it's going, relatively according to plan. We do talk about how it could just go sideways and do a whole lot of nothing. But we opened up the possibility of it doing what it did today, which is why I wasn't fully out. I just went into a more safer bullish approach, which gave me premium. And now that premium offsets this like $1 higher that I'm rebuying Tesla at than where I sold. So essentially, it still actually ends up working out overall because I'm still making more than if I just held. But it reduces substantial risk that could have actually happened, right? That could have materialized. You never know. Like, for instance, what if Li Auto's earnings went poorly? Tesla would be now back at 185. You know what I mean? So keep that in mind. It's all about risk versus reward. So anyway, that's the main thing I'm looking at and the main thing I'm seeing. So let me know what you think down below. Thank you so much for watching. I'll see you tomorrow. Peace.